Recording in progress. So I'm going to take this off, right? And I'm going to, I've said it before. I made a tweet, I think some weeks ago. I said, if you only focus on the 4 hours most recent breakout, you're most likely going to have issues with directional bias, right? So, right. So now everybody, please pay attention. Leave the chat box alone, right? It is distracting. It distracts people as well. So just focus on what we are here to do. Right? We just have about 40 minutes to get out, 35 minutes, right? So now there are two major ways you can build bias. I've always said it that as a trader, there are only two things that should be your primary focus, right? Every other thing is just background noise. That the two things you should actually pay attention to is number one, how to build bias from higher time frame. Number two, focus on one entry model and just go down the rabbit hole, right? So all you want to just do as a trader is that you want to master one entry model, and number two, you want to master directional bias, which we also call storyline, right? We also call it storyline, but overall, whether it is called storyline or higher time frame bias, we understand what it means. So there are two principal ways for you to be able to build bias, right? Number one, the first one, let's say for example, we are starting from the weekly time frame, right? We are moving straight to the daily, the 4 hours and the 1 hour, right? If you look at the time frames I have here, right? Weekly, daily, 4 hours, 2 hours, 1 hour, 30 minutes is like my last resort. Everybody knows, right? So now there are two ways to build bias, right? From the higher time frame is that the first one is being able to use key levels to be able to build bias. So we know that we have key levels, right? When we move to the line charts, there are two types of, let's say for example, we have an A-shaped key level on the weekly time frame, right? So let me use something like this. This one will be better. So let's say, for example, on the weekly time frame, we have an A-shaped key level that price. Where's this guy? So let's say on the weekly time frame, we have an A-shaped key level that price is reacting from. So there are two major ways we can actually build bias. The first one is using the first one is being able to use what we call the key levels, and the other one is being able to use liquidity, right? So let's say, for example, on the weekly time frame, price sweeps price comes to this particular A-shaped key level on the weekly time frame, reacts from it and closes below, right? Now there are two things we want to see. There are two major conditions that must actually be met on the weekly time frame. Number one is that we want to see candle rejecting from the A-shaped key level, right? And number two, the candle closure matters a lot, right? So we see that price is actually going to tap into this A-shaped key level, right? React from there and also close below, right? So these two criteria must actually be met on the weekly time frame: candle rejection and candle closure. The moment we have this candle rejection and candle closure, the next thing we want to do is move on time frame lower to the daily. So we have to move one time frame lower to the daily, and on the daily time frame, we want to see that daily must be in alignment with the weekly. So weekly rejects weekly key level, closes below. So we need to see two confirmations. I mean, the weekly is going to give us an intel, right? The two intels we want to see is the rejection, candle rejection, and also candle closure, right? The moment we have these two criteria met, right, the next thing we need to all understand personally is that these two criteria as being met is not enough, right? But when you are building the bias from the weekly time frame, what we need from the daily is that the daily needs to give to us two things. The daily is either going to give to us a liquidity sweep and a break of structure to the downside, or the daily is going to give to us a most recent breakout to the downside. Now, this is where you need to pay attention. A most recent breakout to the downside on the 4 hours, a daily most recent breakout to the 4 hours on the daily most recent breakout on the 4 hours is a liquidity sweep and a break of structure. A most recent breakout on the 4 hours, on the 1 hour time frame is a liquidity sweep and a break of structure, right? So when we start building our bias from the weekly time frame, two criteria needs to be met. Number one, candle rejecting from a key level, and candle closing either above or below the key level, depending on the direction of bias. Then the next thing we want to do is move on time frame lower. We are going to the daily. Daily must give to us a liquidity sweep and a break of structure, or the daily must give to us what we call a most recent breakout to the downside. The moment we see price give to us a most recent breakout to the downside, a most recent breakout to the downside on the daily is a liquidity sweep and break of structure on the 4 hours, right? So the primary purpose why we want to see these two things on the daily, either this or this, is that we need to ensure that the daily is also in alignment with the weekly. So for example, weekly is showing to us a bearish bias, but daily also needs to confirm that we are also in alignment with the weekly, right? So the daily is going to give to us either a sweep of liquidity and a break of structure, or the daily is going to give to us what we call a most recent breakout. So the last place where we need to just confirm our directional bias, right, is on the 4 hours. And the moment you see that your daily is in alignment with your weekly, there's only one thing you want to see on the 4 hours. Pay attention to the most recent breakout. This most recent breakout on the 4 hours is a liquidity sweep and a break of structure on the 1 hour. Just as we have the most recent breakout on the daily that is a liquidity sweep and a break of structure on the 4 hours, right? The moment you have your most recent breakout on the 4 hours, it tells you that the 4 hours is in alignment with the daily is in alignment with the weekly. So we have three major higher time frames that are all bearish. It means that all through that particular week, we are only going to be looking for selling opportunities. Are we going to have buying opportunities? Yes, but the buying opportunities will be short. It is just going to be for a very short period of time. But overall, all through that particular week, we are going to see that the momentum is going to move to the downside because weekly is bearish, daily is bearish. Farmers has also confirmed that we are bearish. So any buys we are going to see is just going to be short term, right? But we know that overall the momentum is always going to kick off, right? More of the momentum or volume in the market is going to go to the higher time frame directional bias. So the first way for you to be able to build bias is through key levels. The second way for you to be able to build bias is what we call through the liquidity concept, right? So there's something called liquidity, the forms of liquidity. So let's say, for example, this is a particular candle, right? If this is a particular candle on the weekly time frame, right? The weekly high and the weekly low can actually serve as internal range and external range liquidity. So what that means for us is that this previous weekly high, right? Let's call this particular candle week 1, right? So let's say this previous weekly high is on the weekly. This is a weekly time frame, right? So this particular first candle represents week 1. So this is the second way you can learn how to build bias. So after week 1, we see that week 2 candle was created, and what week 2 actually did was that week 2 did not trade into any key level. What week 2 just did was that it swept the previous weekly high and it closed below, right? So the first criteria for building bias when we use the key level is that price must react from a key level, and candle closure. But when it comes to building bias with liquidity, we don't want to see a reaction. We want to see a liquidity sweep. So what we know that price is going to do is that price will sweep the previous weekly high, close below. The moment we see that price has swept the previous weekly high and close below, it gives us the intel, right, that on the weekly time frame, 2 criteria has been met. Number 1, we swept liquidity. Number 2, we close below. So we call this candle week 1. We call this particular candle week 2. So what it means for us is that because of this thing that has happened in week 2 swept week 1 high, that is the previous weekly high, right? It means that week 3, we want to continue to see sales to the downside until this previous weekly low is taken. Because what people call advanced structure, right, actually is not really advanced like that. But I'm not trying to spite on anybody's work. Everybody knows by now that I will never spite on anybody's work. All right. So, but what people call advanced structure is not really advanced. What they just try to say is that price is seeking liquidity, right? Price is coming from internal range to external range. Price will come from external range, come again, take out internal range, and continue that direction. External range will be taken, price will come back again, take out internal range. So the concept I was trying to say is that price is just looking to bounce up from one point of liquidity to another. Engineered liquidity from internal to external, from internal to external, right? That is the only thing that they're just trying to pass across when it comes to advanced structure. The price is actually just looking to attack liquidity, right? So when we use the concept of liquidity to be able to build bias, one of the things we need to understand is if we call this candle week 1, we call this week 2, we call this week 3. This week 3 is what we expect in a particular week. So let's say on a Sunday we want to build bias for the coming week. So what I'm going to do, right? Week 2 swept week 1 high, which is the previous weekly high, and it's closed below. So the first criteria on the weekly time frame has been met. So the next thing we want to do is we'll move one time frame lower, right? That means from the weekly we are going straight to the daily, right? And the same thing again needs to be confirmed. Daily has to be in alignment with the weekly time frame. So on the daily, we want to see daily give to us 2 things. Daily is going to give to us a liquidity sweep and a break of structure, right? Or the daily is going to give to us a most recent breakout to the downside. The moment we see daily give to us any of these 2, it means that daily is now in alignment with the weekly time frame, right? So weekly is bearish, daily is also bearish, right? Don't forget, this is week 3, the week we are looking to trade to take out this previous weekly low, right? So all our expectations for week 3 is going to be built around this daily and also the 4 hours. So the moment we have this on the daily, remember what I said, a most recent breakout on the daily on the 4 hours time frame, this most recent breakout on the daily is a liquidity sweep and a break of structure, right? So what we want to see on the 4 hours, right, just to be sure that the 4 hours is also in alignment with the daily, is that the 4 hours must give to us a most recent breakout to the downside. And I've explained it in most of our calls that there's a difference between breakout and break of structure, right? So you can see one of the things we want to see also on the 4 hours is our most recent breakout. And this most recent breakout on the 4 hours on the 1 hour time frame, it's a liquidity sweep and a break of structure, right? A most recent breakout on the daily is a liquidity sweep and a break of structure in 4 hours. The most recent breakout on the 4 hours is a liquidity sweep and a break of structure in 1 hour. So all we want to see is that after we have taken out this previous weekly high and closed below, right? The next thing we are moving in, we are going to the daily time frame. And what we want to see on the daily is a liquidity sweep and a break of structure, or we want to see a most recent breakout. If price gives to us a most recent breakout on the daily, that means on 4 hours we have a liquidity sweep and a break of structure. All of this all encompassing is just to ensure that the 4 hours, right, and the daily are all in alignment with the weekly. So 4 hours is in alignment with the daily is in alignment with the weekly. The moment we understand all of this, we are able to piece all of this together, right? We understand that the momentum for the 3rd week is going to be to the downside, right? So we are going to see that price is going to attack the next liquidity that is being created. So we have a couple of examples, right? That is one of those things I just wanted to share with us, right? So if you come to GBP USD, for example, right? When we start from the monthly, I think I would love to start from the monthly because I love to see that we do a thorough top-down analysis, right? So if you look at what GBP USD is doing on your stuff, your message on the chat box is distracting. Who is that? So when you come to GBP USD on a monthly time frame, I want to show you what you need to see. So I know my chart is just one color, right? It shouldn't bother everybody because I mean there's only one thing we are looking for, key levels, right? So if you look at what price is doing here, right, on the monthly time frame, when you move to the line chart, you can spot the V-shaped key level that got created, right? Right? So you can see we have a V-shaped key level on the monthly time frame. So the first question we need to ask ourselves is that you can see that the market conditions has actually been satisfied on GBP USD on the monthly. We swept liquidity. We came back to the V-shaped key level that got created. So let's take about this liquidity first. Let's just focus on the monthly V-shaped key level that got created. So you see what price did. So the two criteria that needs to be met from this monthly time frame is that we want to see price. This is November. You can see how November closed. So in November, you see how I have spoken about it, that candle closure matters a lot, especially weekly and monthly. It matters a lot. How a candle closes it matters a whole lot. So when you look at what price did, price tapped into this weekly and this monthly V-shaped key level that got created. And after price tapped into it, we had a closure above, right? So the two criteria on the monthly time frame has been satisfied. So which means we have to move one time frame lower from the monthly down to the weekly. So we'll move straight to the weekly time frame. You will see that what the weekly actually did, right? Come back to this, right? So let's put it clearly. You can see this is a monthly time frame key level. So, but when you look at what the weekly did not give to us a break of structure at all here, right? There was no break of structure, but you can see there was something weekly did, right? Weekly came back to this bearish open close, right? Everybody who has been following our commentaries, right? You should know by now, I've taught many of us for free about how key levels should be used. I've told us that if we have, let me quickly reiterate, right? A-shaped key level should be used for sales, right? V-shaped key level should be used for buys. And I told us the third type of key level is the open close, where opening price and closing price overlaps. The bearish open close should be used for sales. And I told us that all of these key levels should be used for whatever they are supposed to be used for until they are proven otherwise. And I told us one of the ways that these levels are proven otherwise is that price will break above it, disrespect it to the upside. So what that means is that price will come back to that same level and continue to buy from there, which means if price disrespects a bearish open close, closes above it with an impulsive move as a body, that bearish open close that we are supposed to sell from now becomes a level we want to see price buy from. So I'm saying all of that, I'm reiterating all of that, right? To say this, when you look at what price did on the weekly time frame, you will see that on the weekly time frame, we had two consecutive candles to the downside, created a bearish open close. The bearish open close got disrespected. Price broke above it with an impulsive move to the upside and closed above it as a body. And you can see what price did on the weekly, but that is not where I want to come. That's not what I want to show to you. So you will see that we came from the monthly rejected monthly and closed above. So what did the weekly do? You can spot what the weekly did. Weekly came for a previous weekly low, right? After coming back for a previous weekly low, you can see what we did here, right? So now we are combining the two ways to build bias together to be able to form a higher time frame bias on the weekly time frame. So monthly came to a key level, but on the weekly time frame, we swept a particular liquidity and we also closed above. You can see how we closed above that particular previous weekly high, this previous weekly low, right? That was swept. So from the weekly time frame, now we are moving one time frame lower, right? We are going to the daily. So monthly reject monthly, closed above. Weekly swept the previous weekly liquidity, closed above. And what did the daily do to us? Look at this. Look at what the daily did to us. Move straight to the line chart. You want to be able to see what price did. So price gave to us what we call a lower low, right? Give to us a lower high, give to us a lower low, and give to us a break of structure. So the moment we have this break of structure, what does that mean for us automatically? It means that the daily is in alignment with the weekly. The weekly is also in alignment with the monthly. And what is the monthly showing to us? What was the intel that the monthly showed to us? More bullish signs. Weekly gave to us more bullish signs. The daily confirmed it that we're also going to be bullish because number one, we swept liquidity here on the daily. We also broke structure. So you can see where the break of structure came from on GBP USD. So you can see how we broke that particular structure. Yeah, right. So you can see weekly reject weekly, closed above, daily reject daily, closed above, right? Daily now gives to us a break of structure to the upside. And after daily gives to us a break of structure to the upside, what did I tell us about key levels that gets disrespected, right? I told us about V-shaped key levels that gets disrespected once, twice, and also overlapping inside of an imbalance. And I've said it severally that the market is only looking to do two things. Number one, the market is only looking to attack liquidity and also to rebalance and hold imbalance. So the question is, we know that price wants to rebalance and hold imbalance, but we want to ask ourselves a question. At what pricing level do we want to see price rebalance and hold imbalance from, right? So we know that every key level that price disrespects becomes a level that we want to see price rebalance from. So you can see what price did here. So what do we have here? a V-shaped key level. Remember what I just reiterated. For those, many of us are new here, but for those of us that have been attending the commentaries, you see, I've told us that every V-shaped key level normally should be used for a sell, right? The V-shaped key level should be used for a sell, right? And for a buy. This V-shaped key level should be used for a buy. The moment price disrespects the V-shaped key level, right, to the downside, the V-shaped key level still becomes valid, but we're not going to use it for a buy anymore. Now we're going to use that same level for a sell, right? So now, if you notice what price did here, this is a V-shaped key level that is also overlapping inside of an imbalance. You can see this was the candle that disrespected it first to the downside, close below it as a body, which means that this V-shaped key level still becomes valid for a sell. But the next candle that traded close to it disrespected it up, so to the upside. So contextually, remember what we always say, few trades, more context, you have more accuracy. So this same V-shaped key level got disrespected twice. This particular daily candle is going to serve as what? Internal range liquidity. Now, the beautiful thing about the V-shaped key level is that it is overlapping inside of an imbalance, right? So if you have all of this context in place, the next thing that should come to your mind is what I've always been saying. I've always said that the market has just two responsibilities. The two responsibilities that the market has is to attack liquidity and also to rebalance and hold imbalance at a specific pricing level. So the question is, we always want to ask ourselves, at what pricing level do we want to see price rebalance? So that is why you always see us pay attention to A-shape or V-shape key levels that price disrespected, right? That is also overlapping inside of an imbalance, right? So we want to always see price come back to that particular level, right? That got disrespected and also overlapping inside of an imbalance. Those are the areas we always look forward to. So you can see where we came from, right? Monthly reject, monthly close above, then weekly swept the previous weekly low, closed above, then daily gave to us a breakout to the upside. All of this from the monthly time frame is just to establish the fact that the daily is in alignment with the weekly, just as the weekly is in alignment with the monthly. The moment you understand this, you only want to be looking for buying opportunities in that direction, right? Am I saying there are not going to be sales? There will be sales, but the overall momentum is going to be in the higher time frame bias. So let me take this away quickly, right? So just because of what we see on the monthly time frame, and that should be able to guide us, right? So I'm going to use this particular liquidity. There's something we call the single candle formation to use as liquidity. So we're going to use this particular low, right? We're going to use this particular low. So if you look at this, we swept this particular low. That is internal range liquidity, right? Imbalance that needs to be rebalanced at this same specific pricing level. This is still the daily level. So the question is, now I want you to pay attention to what you are seeing here, right? If you come back to the daily time frame, there's something I want to show to you. So daily has given to us a breakout to the upside here. But look at this now. So let's say, for example, you were unable to get in on this particular buy from this area. But there's one thing I want to show to you, right? Daily rejected the daily key level after rebalancing and only balance at this specific pricing level. The next thing we can see is that now we want to use the liquidity formation to be able to build bias. Look at what I said. Price sweeps the previous daily low. And after sweeping the previous daily low, we know that the previous daily high should be the next target. But overall, this daily high here that is resting above here should be the next target, right? So if we are building a bias from the daily, the next time frame to go, one time frame lower should be the one to the 4 hours. So we swept the previous daily low, right? The first two criteria that needs to be met is sweep of liquidity and candle closure. So we swept this previous daily low, we closed above, right? When we move straight to the 4 hours, we are only focusing on two things. We either want to see the 4 hours give to us what we call a breakout to the upside or a liquidity sweep and a breakout structure. So you can see from here, this is the daily low that was swept. Previous daily low was swept. So what did the 4 hours give to you? Move to the line chart again. Can you see the most recent breakout here? Look at this most recent breakout to the upside, right? That most recent breakout, contextually, you know what that means already. You know what this means for us. We broke out to the upside with an impulsive move to the upside. So this thing brings us back again, right? Move to your line chart. We use line chart a lot. A-shaped key level that gets disrespected. Remember, every A-shaped key level should be used for what? Every A-shaped key levels should be used for sales, right? Until proven otherwise. So we know that every A-shaped key levels that we see created should be used for sales, but until proven otherwise, which means that the moment price breaks above an A-shaped key level, closes above it as a body, the A-shaped key level that should be used for sales still becomes valid, but this time we're going to be using it for buying opportunities to the upside, right? So I'm saying that to say this. I'm reiterating the basics of key levels now so that nobody will get lost, right? So if you look at this, daily swept the previous daily low, gave to us a 4-hour breakout. Are you seeing it's just the same context everywhere? When you move straight to the line chart, what can you find? You can find an A-shaped key level that got disrespected to the upside, right? And look at what price did. Price broke above the A-shaped key level to the upside, closed above it with a body, and you can see there was no need for price to do any deep retracement at all, right? Price came back to that A-shaped key level, and look at what price just continued to do. It just continued to move to the upside, right? And look at what price continued to do. It just continued to move to the upside until all of these conditions became satisfied, right? So let's move to the 1 hour time frame. So if you look at what we have always been saying, right, that so on the 4 hours time frame, My God. So on the 4 hours time frame, you can see we had an A-shaped key level that got disrespected to the upside, closed above it as a body, right? I hope we are paying attention, right? A-shaped key level that got disrespected, price closed above it as a body. The next 4 hour candle came into this place, tapped into it and started to move to the upside. So sometimes I teach our guys, right, about single candle formation to serve as internal range liquidity. So if you see what is happening here on the 4 hours, when you move straight to the 1 hour time frame, it becomes very clear, right? So now look at this. The A-shaped key level on the 4 hours is an open close key level that got disrespected, right? So 2 consecutive candles to the upside created a bullish open close. It got disrespected twice. The beautiful thing is that the key level is also overlapping inside of an imbalance. The question is, what comes to your mind when all of these conditions become satisfied? The next thing that comes to your mind when these conditions are satisfied is that the single candle formation is going to serve as internal range liquidity. Am I right? Which means that this 1 hour low is going to serve as internal range liquidity. This 1 hour high is going to serve as external range liquidity. But we know where the overall external range liquidity is. The overall external range liquidity is still at the top here, which is that daily high that needs to go. But we are paying attention to 2 things, entry and bias. So what did you find here? We swept liquidity, came to rebalance and hold imbalance at a specific pricing level. You can see all of this imbalance here that needs to be rebalanced. Single candle formation is going to serve as internal range liquidity. So what did price do? Price swept liquidity, rebalance this old imbalance at a specific pricing level. When you come straight to the 4 hours, you can spot that on the 4 hours time frame, there was no liquidity that was created. Price just tapped into this particular A-shaped key level. But when you move straight to the 1 hour time frame, this is where patience comes in. As price was approaching your 4 hour key level that has been marked out, you will see that this 1 hour time frame this 1 hour time frame candle traded very close to the 4 hour key level, right? That 4 hour key level, it didn't tap it, which means that this low is going to serve as internal range liquidity, right? The beautiful thing is that the context for the market has really been satisfied. We have liquidity that needs to be swept. We also have imbalance that needs to be rebalanced. But the question is, at what pricing level do we want to see price rebalance that old imbalance? So where did price come back to? The 4 hour key level. So what did 4 hour do? We rebalance the old imbalance, swept liquidity, we closed above, right? Single candle formation again is going to serve as what? Internal range liquidity. Internal range liquidity swept, price came back where again, right? Move to the line chart, what will you find? You can find a V-shaped key level, right? So price didn't come back there, nobody would have gotten triggered. But you can see what we are talking about. Sweep of liquidity, close above, single candle formation serves as internal range liquidity. We expect price to attack liquidity, come back to the V-shaped key level that got created, and want to continue to see price run to the upside. But this is where our bone of contention, right? You can see this. One single candle formation served as both internal range and external range liquidity. What price did was that we attack liquidity, then we balance and hold imbalance at a specific price level. Right? Are we getting it? Is it clear? Oh my God, 3 minutes left. Now, I think we might have a long night, right? So what we are going to do is I'll send another link now, right? So join as fast as possible. I'm going to send another link. This is 12 o'clock already. This is 12 o'clock already, right? I'm going to be sending another link right now. So join as soon as possible. So let me end this one so I can start converting.